Hey everyone, this is Nick from Us versus Herd. Please like, comment, and subscribe to this channel. We got a lot more content coming out, and I hope this video will be a huge value to you. What we're going to be talking about today is how you can trade with a full-time job or if you have a part-time job. So basically, how can you make money while making money? Now, you probably say, hey, I've done some trades before and I got to monitor it, I got to babysit it, but in the way that we do things here, you don't necessarily need to be sitting at your desk making sure a trade happens. I mean, you can, like when I'm working at my desk, I have the charts open. If I see an opportunity, I make a trade, or if things are going well with the trade, maybe I'll let it ride a little bit longer then I'm not watching it. But regardless of that, I'm going to show you how to make some trades and while you have a full-time job, so you don't necessarily need to babysit it, and how you can set up goals and plans and all that kind of thing. So what we're looking at here, the market just opened about 40 minutes ago. I have a few positions on, but what we're going to go over first is finding trades, what those kind of trades look like, and what to do with them after you put them on. I have a couple trades here that I put on. I'm going to actually show you first how to find a trade that would be good. Let's try to, what I like to do on super green days or super red days, I typically like to put a trade on, or if a stock takes a huge hit or if it rips up. What I do here is I don't buy options. So a lot of people outright, what they do is they buy options. Let's just put in probably one we're going to be looking at today is Chipotle. Just to give you an example, let's put this chain here. So, what a lot of people do is they buy options. So what they'll say is, let's say, I think the stock is going to go up or it's going to go down. So let's say I think it's going to go up. I'll buy this option here for $4.50, and basically it needs to go above the, if I were to buy this, the $4.2250 strike, and it would need to increase in value. Obviously, that's difficult to do. I only have a 46% chance that this will be in the money. So I'm typically on the seller side unless there's some extraordinary opportunity. But for the most time, I'm selling options, and what that means, instead of buying calls or selling buying calls or buying puts, I sell them. So you're writing contracts. And what you can do to reduce risk is by selling a vertical. So instead of hitting the buy here, you can go to ask and say, hey, I think the stock is going to go down. So it's kind of reversed. When you think the stock is going to go up, you're buying calls. When you think it's going to go down, you're buying puts. But when you're selling options, it's the opposite. So if you think that the stock is going to go down, you sell calls. If you think the stock is going to go up, you sell puts. So obviously, I don't like to trade. Let's actually look at Chipotle's stock. Is interesting right now. Let's actually bring this up on the big screen. Mainly because I think they lowered their guidance yesterday, and yesterday they fell like 30 points, and today they're still falling, it looks like. So they're coming back possibly down to, let's just go back since last few months here so you can see a little bit better. So, they were hovering around this 400 mark here, touched it a couple times, went up, touched it, and then they, ripped up in March up to, almost $500, and then they've just been downtrending. And yesterday, it looks like they were going to consolidate around here, the 450 mark, but yesterday Chipotle said they're going to have additional costs with marketing, and they're going to do things. So when you're looking for opportunity, you say, why would you buy this? Why would you go long, or why would you go short? So I look for opportunity in different areas. One could be like news related. One could just be a stock was sitting at a certain price for a long time. If you were looking here, if this stock was going here, just kind of operating in a range as it did here, eventually it bounced up. So you could say, okay, every time it got to 430, it bounced down. So you could short calls at 430. Eventually it did break through here, but right here for the foreseeable future, it hit 430 here, hit 430 here, hit 430 here, and then went down. And so you could be making money there. I mean, obviously you would have gotten in trouble here, But that's why you define your risk, so hopefully you made some more money than what you lost right here. So I'm just going to show you. So what I like about Chipotle right now is that it's a big mover. It has some bad news. The company obviously is not going to be going out of business anytime soon, so you're not at risk for that. What I'm going to show you is how you could put on a trade. So a couple different ways that people put on trades where they have to watch it, or a trade that I'm going to show you where you don't have to watch it because you're a full-time job or you're doing something else, or that kind of thing. So I'm actually going to show you how to put this trade on here. So I'm going to sell a vertical, and what that means is, let's say if I were to sell this put outright. So I'm just going to sell one put, 420 put for 380. It takes a lot of buying power. It doesn't even show you because okay, yeah, $41,000. So if you don't have more than that in your account, you're going to have a hard time here. If you sell a vertical, yeah, you're not going to make as much money, but one thing that you do is you define your risk. So you have a max loss and you have a max profit, which you had a max profit anyways with selling the vertical. So what you do here, just to give you, this is not the actual trade that we're going to put on, but I'm just going to show you here real quick. Your credit's only $1 now. It was $3.80 before. Your only credit's only $1 now. But the buying power it takes up, you're only you're only at $150 in buying power. So I'm just gonna show you real quick on a trade that I would do, if I was going to say, hey, I want to trade this stock. I believe in Chipotle for some reason, and I want to trade it, but I have a full-time job. I can't watch it. What do I do? So the best way that I find out is that you put a longer duration on there. So like this is only 2 days, so these expire on Friday. So you definitely don't want that, especially if this stock. I mean, this stock is still falling. Let's see what the daily looks like. Like I said, okay, yeah. So yesterday, let's take a look at the last 3 days here, so you can zoom in here. So yeah, we were riding high here, 458, had a nice little bump here, and then the news came out after hours and just been ripping down and just downtrending since then. Actually touched 418 as of this morning, and it's bounced back a little bit, but still in a clear downtrend. But what I like to do is when a stock is red, I like to sell puts, and when a stock is green, I like to sell calls. And the reason for that is because you're going to get the most value for your money, and also you say, hey, that's kind of bucking the trend, but a lot of times stocks follow the pattern. So if you buy on, let's say you sell puts on a green day, and then the next day is a consolidation, it comes back down, you're going to start losing money. It really depends on what you believe in the stock to do. If you think Chipotle should be at 450 and it's at 420, obviously you're going to go long. If you say, no, this is still going to go down. However, in my conscience, I can't short it after it just dropped 30 points. That's just for me. So, whether the trade works out or not works out, we're just going to try. But what we're going to do here is I will show you what a trade I would do. So right now it's trading at 420. Because it's had such a downtrend, I would definitely go long on this. You would say maybe wait another day, but at this point, for example purposes, I'm just going to show you how to execute the trade right now. I'm not actually going to put the trade on, but I will show you a trade that I would do if I were to execute this one. So I would pick, 9 days a little short. I would look for at least 10 days or above. So I would go like the 16 or 23. You don't want to go like too long out there because then you don't collect your money, as fast. So what I like to do here, let's say I was going to go for the 16 days. I think the 16 days would be a good spot. You could sell these right here. So I'm going to go long. So I'm going to sell put. So you could sell the 420, 415 vertical. Let's see what we get for that. So that's 215 credit, and as you can see, the risk is only 285. So if the trade doesn't work out, our max loss is only 285. And the idea here is to put trades on and have occurrences and not necessarily be right all the time. And different trades come around at different times. So just because you're wrong currently, so let's say I buy this right now, and it goes down to 415, you're going to you're going to have time for it to come around. So yesterday, went down 30 points. Down today is down another 6 points. So if this goes down another 5 points tomorrow, you still got time for the stock to come around. So if it goes down to like 410, you still have another 16 days for it to come around. Usually in most cases, you are going to get a bounce. Now, this news was pretty, impacting. So this possibly could not bounce, but that's the risk when you're trading. You have to take risk when you're trading. You can't just sit on the sidelines, wait for it, and then the opportunity passes you by. So this is an opportunity. I do think probably Chipotle is going to go up probably this year to the closer to the $500 mark, or I'm hoping in the short term with this trade that would go back up to the 450, 440 range. But right now, it looks like we're getting a good strike price, 420. 425. So this is 215.25. Now to lower your risk more, if you'd like, see this now has a probability of being 50% in the money. What you could do, what I do, if it's definitely a longer duration, you can sell actually. Well, this one's in the money now. 425 wasn't in the money, but you could sell one in the money and one out, and then buy the one out of the money. So I'd buy this is the same thing because it just dipped down. It's now 419, as you can see here. I would sell the 420 and buy the 415, which I had here. Or, you could, if you really were aggressive with it, you can go up a little bit more and buy and sell both the ones that are just right in the money there. They're just at the money. And then it's kind of a 1-for-1, 250 for 250. So max profit is 250, max loss is 250. So, worst case scenario, you're going to lose $250. You most likely won't lose all of that. I bet you lose like 175 or 150 unless it goes to like way down there, or you hold it to expiration. So that's how you put the trade on. Then you just send an order and see if you get it filled. So I will show you what I did here with a couple trades on here. I have down a little bit of money today. It looks like the stocks. Let's see what we're doing here. Yeah, the stocks are coming together, going up, and Amazon's going up a little bit. Google, I got Alibaba trade on right now that just got out of the money. But I'll show you what I do with a trade that I have on right now. So I kind of did the same strategy. So Alibaba, I put on these expire in 9 days. I don't think I put these trades on this week, but I only have one order. So as you can see here, I have a good to cancel order on Apple. What I'd like to do, I will show you this right now, is how to put a order in for these trades. So that way, when you're at work and it does hit the price that you want to get. So for example, Apple, I put a 20-cent debit in here, and right now it's trading at 61 cents. If you are at work and it hits your price, it's going to automatically fill for you, so you won't have to worry about that. Basically, what you have to do is manage, instead of managing your wins, you're going to have to manage your losers. So, and really, I only manage my losers when it comes like close to expiration. I mean, I've seen these stocks do some crazy things, like especially like Tesla's gone down like 20 points, and then the next day it comes up 25 points or 30 points, and then so you just got to give it time. So this strategy requires time, and then making sure that you manage your losers. Now let me show you a trade here. Let's actually put on some good to cancel orders here because I only have one on. So let's do Amazon. Amazon expires in 9 days. Currently trading at $9.95. I have 1,000. So I was selling. Let's actually look at that trade that I have here. So I put this trade on yesterday when it was trading right. Let's see here. It was trading right around the $1,000 mark. Now today it's $9.95. Yesterday it took a big dip. Now let's take a look at that chart. Stock struggled yesterday because of oil and some other things that were going on in the market. So so yesterday, for an example here, Amazon, I put a trade on. It spiked up big pre-market, went all the way up to 1,017, and then just fell down here. And I put the trade, I think it was around $9.97. I put the trade on. It was about $997, and now it's $9.95. So since I put the trade on, not much movement. It did touch $9.90, so I definitely could have got a better price on it, but it looks like that's the game here. Hold on, let me silence this. Some spammers calling me. That's the game. Sometimes you don't get the best price. I thought that I was going to get a price down in the 997 area down in here, but just fell. But luckily it came back up on this day, and then yesterday it went back up above 1,000. So I feel pretty confident that Amazon will come back around. Now, if I don't feel confident that the stock will come back around, I will obviously just get rid of it and then find another stock to go into, or wait a few days and get a new position on this stock if I believe in it. I don't like switching positions too much, so if I'm bullish on Amazon, I'm not actually just going to switch to selling calls like right away, because as you can see, you can get in trouble with that. But what I will show you was a trade here that this Amazon trade. I'll just show you the trade that I did. So let's go to so under account statements, I'm using Thinkorswim, by the way. Let me pull up the trades I did in the last 7 days, and then this is the trade history. So Amazon, let's see, Amazon on 6/19, so 2 days ago, I got a $1.05 credit. So what I look for is I normally try to sell it for 50% of what I achieved, and not really take it down to expiration right now. You know, get close to expiration, but not necessarily get all the way down there. So if I took a $1.05 credit in there, I'm probably going to get it. I'm going to try to sell it for 55 cents or 60 cents. So what I'm going to do here is on Amazon, I'm going to go back to the activity and positions. I'm going to select my vertical, create a closing order. Now just be careful with this. Make sure you hit the lock button, because sometimes it gets a little crazy here. I've had orders where I didn't hit that. I changed the price, but I didn't hit lock and then hit confirm and send, and then it filled the order right away. So what I'll do is I'm going to put in a 55-cent order. Oops. And then instead of hitting day trade here, I'm going to hit GTC, which means good to cancel. So this order is going to be in here until I actually cancel the order with a different order, or until it actually gets filled and sold. So I'm just going to put this order in here, 55-cent order. We're going to confirm that, makes good, and we're going to send it. Okay. So, and then that should appear here under the monitor tabs in Thinkorswim. You can see here, my price here for Amazon, 55 cents, is right now trading at $1.27, so I'm a little bit underwater on it. But that's the game. I mean, I still have 9 days on it, and it's only 5. Let's see here, what was the price again? Yeah, it's only $5 away from my strike price. I'm in the money, but things are good. Now, the one thing that I will also do is that I don't have on right now, which I'll show you. So saying I want to manage my risk. So right now I'm already managing my winners. I put an order in to manage my winners. That way when it reaches the price that I want, it will sell. Now what happens when the stock doesn't go your way? You have to set a price that you say, hey, I do not want to trade Amazon anymore. At this price, I want to get out of the trade with whatever money that I have left, and then reevaluate either Amazon or use that money to get into a different stock. So I'm going to go, let's say, I bought around $9.97, so I usually try to give since I have more time, I'm going to probably say around, let's see what happened here. So $9.97, so 87. So I'm going to say $9.85, probably going to get out if it gets a little crazy. At that point, I mean, unless you're coming up really close on duration, so let me put in $9.85, and then this will mark. So I'm going to say, I usually put a note here, because sometimes I have a lot of positions on, and I don't always remember what my strikes are. So if I get an alert, this will also alert your phone. I'll say above 1,000 is my strike here, but if you can always get notified. Let's see, I'll show you here. Notify sound on here. It'll notify my mobile devices, my iPhone, my iPad, or if you have Android, whatever the case is, it's going to notify you on your mobile device, which is good on the go. So I like Thinkorswim for that. Like other platforms like Tastyworks, they don't have a mobile device. I don't even know if they have an alert system. I do have some trades going on Tastyworks, but it's not my main platform because I currently run an IT company and I'm always on the go, so I like to trade on the go. So Thinkorswim is my platform as of today. So I set an alert. So let's say this is not alert for 985. So if this goes below 985, I'm on the go. I'm going to get alert on my phone. So I don't need to watch the chart and see the ups and downs and what's going to happen with it, because I don't really care. The only things that I care now is I define my winner and I define my losers. So I define my winner at the 50% profit, so I don't know at what price that will be to get there. I'm guessing it's going to take a couple days and probably like 1,010, which it could easily jump 15 bucks. As you can see here, this jumped from down here all the way up here in minutes. This took place. It went from 1,017 all the way back to 1,000, and this is a 15-minute chart. So within 15 minutes, it went from it dropped 17 points. So it can move down that fast, but also it can move up that fast. Like right here, Amazon went from 990 to 996 right at close in the last 30 minutes, and then it just kind of consolidated there. So, it just depends on volume. You don't know where it's going to hit. So when you sell options, you're waiting for time, you're waiting for theta decay, and you're waiting for yourself to be right. When you buy options, you actually have to be at the helm because you're trading these spikes here. So let's say at the open, because I thought it opened high, I sold some calls. You would actually have to sell right here. You'd have to actually sell it today. When you buy options, it's more of a quick flip thing, so you actually have to watch it. Selling options, you don't have to watch it. That's why I kind of prefer that method. It's not a lazy way to trade by any means. It's just a smarter way. So I like to just set my loss here. I could say, okay, at 995, I'll see how much money I'm down. Do I still believe in this? Was it just a one-time hit? Does it look like it's downtrending? If that's the case, I'll get out. I'll take whatever money I have left and get into something else and just let Amazon breathe for a few days, or not even trade it this week. Depends on obviously the setups. So that's kind of how I set up my trades. As you can see, now these orders are in, and then we made some money back since we started the video. Let's see here. We can go to the market, and then you just get alerts on your phone. So once you get into a trade that you want to get into, you just have to define the loss, and then define the risk, and then the profit. So now that I defined what I want my profit to be and what risk I'm willing to exit the trade, obviously if you get into a trade like Amazon. If you get in at 995 here, don't set your alert for 992 and have 10 days to expiration. Or if tomorrow you set this and then tomorrow the market opens red, or if you're in a losing position and you still got 10 days left, let it ride out. Like last week, we had a major down weeks. I was down on one account like 800 bucks, and I waited and I got all that money back, and then I made some profits. So this game is about waiting and about being right. So some people trade further out to expiration. I don't really trade like 40 days out or 30 days out. I kind of stick with the 7 to 14 days. At least as long as I have 7 days. But I like to have my sweet spot's probably like in the 10 day range. Is kind of how I've been operating for these positions. Now, like I said, if my assumption or my strategy changes on Amazon, like let's say Amazon comes out with news that something terrible happens and I'm not going to get my money back. If I'm already at a max loss, on this and I had 10 days of expiration, like what I'll just do is I'll just write it out and see if I can get some of my money back. If not, I'll just write it out to expiration day and sell it for max loss, and that's all you can do. But if you're at max loss, and you still have a lot of time left, just don't go up and sell it right quick and say, oh, it's a loser, I'm done with it. If you're already losing all your money on it that you defined, then what's the risk of holding it? There's only upside there. So that's another thing, is when you're at max loss, just hold on to it if you have time. If you don't have time, then you're gonna have to cut it. But if you have time, let's say if Amazon ripped down, I think I have, this is probably gonna cost me 300 bucks in losses. Right now I'm down 50. Let's say it goes down to max loss, and I still have 9 days left. I'm just gonna see what happens with it. I'm not gonna, the only risk that I have is up. If I've already lost all my money on the position, and it's unrealized. So if I have 9 days, I still have the possibility of making all that money back and then making a profit. Now, you obviously don't want to get greedy with it, but. So I just wanted this video to be kind of short and sweet. I won't go through all the details on how to find stocks. I have another video on our channel. I'll put it in the link below on how to find the hottest stocks out right now that you could trade, an easy way to find them. And then If you have any questions, leave a comment below, but I just want to show you how I kind of trade on the go. Like the video, comment, and share.